So when I was losing money in the markets, I always used to wonder what these other traders are doing differently to consistently make profits. And what I eventually realized is that all you need to do is wait for the perfect market conditions to execute a rules-based strategy. And once I started doing that, that's when I finally became profitable. So let me show you exactly how to do it. But before I break it down, here are some of the winning trades I've made using this strategy. And this is just 1 month of trading. So you can see both the winning and the losing trades. So the first question we're going to answer is, why does this strategy work every single day? Because it's built on just 3 simple steps. The key is that it's completely rules based, which removes all of the guesswork. You always know exactly what to do each day, and because it's simple and structured, it becomes very easy to follow consistently. You just come to the markets, check for the 3 steps, and execute the plan exactly as it's written. And that's what makes it so repeatable. The next part is timing. The best time to trade is from 9:30 to 11 AM Eastern Standard Time, which is New York Open, and the first hour and a half of the New York session. You can also trade the London and the Asia sessions using the same concept. But New York is just the best in my opinion. And then London comes second, and Asia is usually the weakest. So I don't usually trade Asia much. But the idea is exactly the same. You trade about an hour and a half after the market opens for each session. Another key point is that we don't want to overthink the market. I'm going to show you exactly how to spot manipulations and simply just let them play out. We don't guess, we don't predict, we just follow our conditions and rules, and that's it. So let's go to step number 1. So step 1 is to mark out key levels in the market. We do this on the 5-minute time frame. You open your 5-minute chart on TradingView and go to the moment market opens. The first 5-minute candle is the candle from 9:30 to 9:35. So what you do is mark the high of the wick and the low of the wick on that candle. It's very simple. And then after that, you just switch to the 1-minute time frame. Now we move to step number 2, which is direction. So we have 2 possible scenarios. Scenario 1, price sweeps the high first, and then we target the 5-minute low. And scenario 2, price sweeps the low first, and then we target the 5-minute high. So it's either a sweep to the upside targeting the downside, or a sweep to the downside targeting the upside. Very simple. But what if we don't get an entry? So if that happens, we expand the range. We mark the new high and the new low that were created after the original 5-minute range was swept. So now we just have a bigger range, and we follow the exact same rules again. We wait for a sweep on one side and target the other side. Don't panic if you don't understand just yet, because I'm going to show all of this on the charts in a moment. So now let's talk about the entry model, which is also very simple. So after we get a sweep, let's say to the downside, we look for the most recent fair value gap in the market. We want one that's as close to the sweep as possible. And when price closes back above that fair value gap, that's going to be our entry. So we wait for a candle body to close above the fair value gap. If we don't get that closure, we don't enter the trade. It's that simple. Now let me show you what this looks like on the chart. So firstly, this is the 5-minute range. We get a sweep of the downside. While price swept that low, you can also see that we're still inside a fair value gap, which just adds extra confluence. You don't need to focus too much on that, but it does help. And then after that, price leaves a new fair value gap. So when we close back above it, that's our entry. From there, we target the other side of the range. Before we jump onto the live chart, if you've learned something so far, make sure to leave a like and subscribe on the channel. Alright, so let's get into it. So here we are on the chart. You can see we're on the 5-minute time frame. This candle right here is the 9:30 candle, which means it runs from 9:30 to 9:35. So this is the first 5 minutes of market open. So we mark the high and we mark the low of this candle. So that's step number 1. Now we switch to the 1-minute time frame. So this is our 5-minute range. This candle here is the first one, and this candle here is the last one. Now we wait for step number 2, which is the sweep. So let's see if we get the sweep. And there it is there. So we get a sweep of the downside. And now we move to step number 3. So we want to target the high of the range. To do that, we wait for price to disrespect the fair value gap. This right here is the most recent fair value gap in the market. Price taps into it, but there's no entry just yet, so we keep waiting. And now we get a clean candle close to the upside. So that's going to be our entry. We enter the trade right here. For the stop loss, you can place it either at the candle's wick or at the candle's body. It just depends whether you prefer higher or lower risk to reward. And what do we target? We target the high of the range. So let's see how it plays out. Price goes straight to take profit. So you can see a 2.38 risk to reward, which is very solid. So when you combine that with the win rate of this strategy, which is around 80 to 85%, these results can be very powerful. Now let's move to the second example. So here we are again at the 9:30 candle. We mark out the high and we mark out the low on the 5-minute time frame, and that's step number 1. Now we go to step 2 and wait for a sweep on the 1-minute time frame. So we do get a sweep of the downside, but as you can see, there's no fair value gap created, so there's no entry just yet, so we keep waiting. Now price sweeps the upside, so this is scenario 2 that I was talking about earlier. We expand the range and mark the new high and the new low. Now we wait again for a sweep of one side and then we target the other. So we get a sweep of the downside. Now we mark the fair value gap that was created, so you can see this one that's created just here. And if you take a look to the left, you can see that price has also respected a fair value gap, which just adds extra confirmation, like I said. So now we're just waiting for a candle to close above it. And there we go. So that's going to be our entry. We place the stop loss below the candle or below the body, whichever one you want, and we target the upside. So this gives us almost a 1 to 3 risk to reward. So let's fast forward and see what happens. Price runs straight to take profits and even goes a bit further, so you can see how clean and effective this strategy can be. In the real market, even making 3 to 4% per trade can be huge when you're working with larger capital. So there's no need to chase 1 to 10 or 1 to 20 risk to rewards. This is more than enough. So before you actually leave the video, I want to give you something for completely free. So if you want, you can go down into the description and claim my free playbook down there, which is a 16-page free PDF that goes over the entire strategy that I've just shown you. So if you want, you can claim that. And also, if you like the video, make sure to leave a like and also subscribe to the channel so you don't miss anything new I upload on the channel. So with all that being said, I'm going to see you in the next one. Peace.